Hey guys, I want to show you a really quick concept. So I talk about risk management all the time, right? And how we use stop losses to ensure that if the price ever drops out of a position we're in, we don't take a loss. We get stopped out. That stop limit order hits a limit or it hits a target with stop price, executes a limit order, and exits you from the trade. It's an excellent tool to use in order to exit a trade when it's dropping so you don't end up taking a loss while other people might be getting wrecked on the same position because they're not using principles of risk management and you are. Now, you can also use those same tools in other ways, and you have to get creative sometimes because risk management is more than just one or two little things. It's a lot of things. It could mean using USDT pairs because by trading the Tether pair, if you get stopped out, you're back in Tether. If you're trading EOS BTC with, if it's a BTC pairing and you get stopped out, you're back in Bitcoin. So if Bitcoin's crashing 15%, you're still going to take a loss. So you have to get creative and use a lot of these different methods together in order to get the best possible setup with the lowest possible risk, reduce your exposure in every way you can. One way of doing that is using stop limits on the buy side, right? So we've talked about a lot using stop limit orders as a stop loss to make sure that if you're in this position right here and the price drops, goes immediately down 6%, if you have a stop loss, say this line right here is your stop loss right there, there's our stop loss, then the current price is right here, and you get stopped out right here, and you lose 2.5%. But everybody else who doesn't have that stop loss is going to lose 5 or 6%, right? You can also use stop limit orders on the buy side, and this is the benefit you get in that situation. Right now, I'm not in BTT. I do not hold a BTT position. Now, I think we might end up moving up from here. We were at this support, but while we were at this support, riding it the whole time, I kept feeling like we were going to move up. We were gonna bounce off of the support eventually, or the support was going to fail eventually, and that's actually what happened. So, since I saw this strong support, I very easily could have bought in right when we were at that support. I could have set my buy order right here and entered this trade at any point, and then it would have gone up a bit and come back down. In this case, it would have gone up a bit and come back down into this red stop loss zone, 2.62 below the entry. I would have gotten stopped out. Instead of entering the trade and getting stopped out, I used stop limits to set my buys. And I had a trailing buy where I would move it based on the price action. So I'll show you what I mean by that. We have some resistance right here, this confirmation level. We have the EMAs. This is part of my Ichima model with the 55 and the 99 EMA. So in this instance, we have the 55 EMA in a bearish configuration, 55 on bottom, 99 on top. And we're wedged between the EMA and this bottom support, right? So I knew that in order for us to really move and break out, we would have to get above the EMAs. That's the major resistance that we were facing. Once you get above those EMAs and we got across the 55 and the 99 EMAs, then we're open to really move up nicely. But unless we get above those resistance levels, we're not going to break out. And instead, you can see that we kept getting rejected. Every time we'd get up to one of those lines, we would catch a rejection and fail and come back down. So I set my order, my stop limit order, above both EMAs. So as we're right here, we see the price is breaking out, right? The price is moving up, and a lot of people right here are saying, you know what, look at this, the price is going up, and off of the support, we're now up 4.9%. Oh, I'm going to buy in right now because it's breaking out. Well, don't do that yet. It still has to get across the 99 EMA. You have to cross both of those resistances. So instead of buying in when it was 4% up, thinking I was going to keep riding the wave, I waited. I set my stop limit order so that it was going to set a buy order when we broke and got confirmation. So this was my confirmation later on down here. When I was back at this point, my confirmation would have been up here. I was waiting until we got across both of the EMAs, hit my confirmation level, then I would set my buy order to fill when the price got up to here at 90.50 or so. The benefit of doing that is it's not going to enter the trade until those resistance levels are cleared. Again, if I bought down here, I would have ended up taking a loss because I would have expected it to keep running up, but then it got rejected from the resistance. So since we never filled and we came back down, then we tested the support again. And that's what I mean by trailing those. Just like you have trailing stop losses to reduce your exposure when you're selling to close a position if the price is dropping, you can use trailing stop limit orders on the buy side as well. So as the price came down, we were dipping a little more and more. What I did was I kept moving my confirmation down. As we got down to this point and then we tested the bottom support again here and started moving back up, I thought, all right, we're moving back up again. Let's see if we can keep going and push through the EMAs. So following that trend line, I was like, all right, that would put, if we're following this path right here, we would probably end up crossing the EMAs around right here. So let me set my confirmation down here. In this case, if we cross and we cross this confirmation, then I'll set my buy order to fill around 89.15 right here. And again, we never broke the EMA, so my order never filled. So I'm still not in BTT. I've made a couple orders that never actually got set because they were stop limit orders. And I'm still on the sidelines waiting for it to break out. And guess what? When it does eventually break out and it does actually cross those EMAs, I'm going to be in that trade. The second we get across that resistance, my buy orders are going to be filling because I'm using stop limit orders on the buy side, and I'm going to be able to ride that trade all the way up. Other people who aren't using these tools to their advantage are going to buy the second we bounce and start moving up, thinking that that means we're breaking out. Then they're going to get rejected at the EMAs and fail again, and they're going to take a loss. And we're going to be laughing all the way to the bank. So, again, you have to make sure that you're creative and use these tools in various ways. There's lots of ways to apply these strategies and these principles when you're trying to develop a risk management model. And this is just one of many things you can do. So, yeah. Play around with it and see what you guys can figure out. There's plenty of ways to reduce your risk and save some money in this market. Trade safe.